In the Philippines, access to financial services has historically been limited to predominantly urban areas of relative wealth. A widely dispersed population across over 7,000 islands, with high levels of income inequality, meant a large section of Philippine society had limited or no access to formal financial services. But the last 20 years have seen something of a transformation in the country. Institutions and organizations across the Philippines have recognized the need to widen access to financial services and work together to achieve it. And one of the chief architects has been the country's central bank, the Bangko Sentral ng Pilipinas. Since its formation in 1993, the BSP has recognized the role it can play by creating a regulatory environment that enables the private sector to reach those previously underserved sections of the population with financial services appropriate to their needs. With policies recognizing microfinance and enabling innovations such as mobile financial services. But this has not happened by accident. The BSP has taken a strategic approach and evolved and reorganized itself to put the notion of financial inclusion at the very heart of its organization. This is the story of how they did it. Like many other developing countries, the Philippines has for many years pursued a program of directed credit, government-backed loans directly to the poor.
In the past, there were many government-driven efforts to provide credit, particularly to the poor and the low income.
But these programs were found to be ineffective.
It started out in the 50s and it failed. It failed miserably. We were not able to reach the poor. The credit programs turned out to be unsustainable. There had to be some change.
The country looked for potential alternatives. Microfinance encompassed a set of financial services provided by microfinance institutions, including many non-banks, in particular small loans in the form of microcredit.
In 1997, there was an effort to develop a national strategy for microfinance, and the BSP was a partner in that process.
In 1997, the National Strategy for Microfinance was developed, involving a number of different government agencies and private and public sector stakeholders. Among new laws enacted with the aim of embedding this strategy was the General Banking Law.
In the year 2000, the General Banking Law mandated the BSP to recognize microfinance as a legitimate banking activity.
Microfinance became a flagship program of the BSP.
So, in 2000, the BSP established the Microfinance Unit and the Microfinance Committee inside the central bank. As the microfinance sector matured, many new players entered the market.
Many commercial banks now are giving loans. And I think this is good because the money for microfinance wholesale fund is coming from the private sector. It's not only government.
The perceived success of microfinance encouraged the BSP. However, they recognized the need to go further.
The requirements of the poor and the low income are actually as diverse as, let's say, somebody who had more income. They also needed insurance. They also needed payment services. So the whole undertaking broadened into a platform, a financial platform for the delivery of services.
This broader objective was financial inclusion.
Financial inclusion, simply put, is providing the opportunity for everyone to access the financial services that they need for their daily lives.
So, the bank identified a series of guiding principles for what an inclusive financial system should look like. The bank also reorganized and renamed its microfinance unit.
In 2007, we also endeavored to also change our microfinance unit and transform it into the inclusive finance advocacy staff.
The role of IFAS was to promote financial inclusion within the central bank as part of a series of checks and balances.
We always ensure that the balance is there, that while the banks are indeed doing this, they are doing it in a sound and stable manner. So you will have the other examination departments like the Micro SME Finance Specialist Group, the Core Information Technology Specialist Group, or SITSG. They're the ones who have to ensure that all these innovations, all these initiatives to expand access are being done in a prudent manner.
There is a potential conflict between advocating something that you believe in, as well as our other responsibility of making sure that there is safety and soundness in process. So we had consciously separated the advocacy part from the supervision part, so that we will be able to achieve the right balance of advocacy and maintaining safety and soundness responsibilities.
As is the case in many other developing countries, one of the key drivers of financial inclusion has been mobile financial services, an area the Philippines has been particularly innovative in by allowing both bank-backed and non-bank-backed mobile payment providers to operate side by side.
We understood that this is a potentially important innovation, and we appreciated the way it might impact the delivery of financial services.
As the country has found success with increasing access to financial services, it has recognized the need to ensure that all participants in the financial system are adequately protected.
And this is where consumer education and consumer protection plays a big role.
This formed a key part of the Philippine contribution when network members of the Alliance for Financial Inclusion came together to make a series of joint commitments in September 2011.
As we meet with success in increasing access to financial services, we will take proactive initiatives to ensure that the consumers are always adequately informed, protected, and able to enjoy the full benefits of their financial access.
The work of the BSP has attracted international attention with recognition of its leadership within innovation and regulation in the area of financial inclusion. In 2011 alone, representatives of over 28 countries visited the Philippines to learn more about their approach, including visits from fellow members of the Alliance for Financial Inclusion Network in the form of knowledge exchanges.
I'm very happy with our regulators. They're the most progressive regulators in the world. If it weren't for them, we wouldn't be where we are now in terms of what we have done.
They've given us all the framework, they've given us all the support. It's now up to us.
Financial stability and financial inclusion are not inevitable. Both demand at least the same measure of energy, imagination, and serious attention. In addressing financial access issues, market-based solutions are not only feasible but preferable. Governments tend to be unsuitable providers of financial services and are instead better positioned to establish a supportive regulatory environment for the said market-based solutions to work. These solutions, of course, present real and valid risks, but these are concerns that can be managed. Regulators must maintain an active dialogue with the market.